Hey everyone, what's going on? My name is Mitesh. Welcome back to another episode of the Cryptos with Mitesh podcast. In this episode, I'm going to be talking about how the coronavirus pandemic is affecting the digital currency industry. As with other global markets, digital currency traders have been dealing with increased volatility in the wake of the coronavirus pandemic. Not to say that it was not volatile before. The Dow Jones Industrial Average is down almost 18% year to date after recovering from a 33% drop earlier, but Bitcoin is even over the same time frame after its recovery. Many expected that this general sense of instability around the world would be Bitcoin's and digital currencies in general time to shine. However, this belief may stem from a misunderstanding of digital currencies, or perhaps, since this pandemic is unlike anything the digital currency industry has experienced before, we simply should not have these expectations. We have seen an increase in over-the-counter trading volume in February and March of 2020 of digital currencies, ever since the pandemic has become major news around the world. Initially, the digital currency market experienced decreased prices across the board as many investors liquidated and capitulated their holdings. However, it now seems that these investors were not simply capitulating their holdings for cash, but rather liquidating them and reinvesting in stablecoins such as Tether, which is pegged to the US dollar. This was because stablecoins are pegged to a fiat or national currency. They are significantly less volatile than traditional stocks and digital currencies such as Bitcoin, and pose a greater store of value. That is not to say that Bitcoin and other digital currencies have been faring poorly, however. In fact, while Bitcoin is even on its year to date, it is up over 30% from April of 2019 to April of 2020, and up 12% from March 15th to April 15th of 2020. Despite this, many critics of digital currencies have hammered the industry and its supporters, stating that digital currencies are not the safe haven they thought they were. These critics believed that in this pandemic, we would see digital currencies boom. And while Bitcoin did top 10,000 in February, it has not lived up to their expectations. However, those in the digital currency industry would argue that Bitcoin did exactly as expected in this environment. And that is that investors either capitulated their holdings for cash or liquidated and reinvested in other safer stores of value such as stablecoins. So, who is right in this situation? The answer is simply both. When viewing an industry as new as the digital currency industry, we are restricted in the amount of historical data we can analyze. Since this industry has never faced a global pandemic like we are facing now, it is almost impossible to accurately hypothesize how the industry will respond. So, what exactly is the bottom line here? Are digital currencies a safe haven we thought they were, or not? Since Bitcoin has been referred to as digital gold, we have seen many investors turn to Bitcoin in a store of value. But due to the recent drop of Bitcoin, it became just like every other financial asset. However, the answer is a little bit more complex than that. While Bitcoins have been even year to date and up over the past 12 months, the safe haven view of Bitcoin has been split among investors and countries. In certain countries with strict capital controls, digital currencies like Bitcoin have shown their benefit of being able to transact freely and at a cheaper cost. In general, digital currencies have proven themselves to be a great benefit and store of value during this pandemic because they allow traders to buy, sell, and convert from the safety of their homes much faster and at significantly cheaper fees than fiat currencies. In regards to stablecoins, the G20 has been considering the implementation of proper regulations around them due to the increased interest and investment in recent months. However, it seems that the overall uncertainty in the market stemming from fear of the pandemic is keeping investors from moving more into the market. They would much rather hold on to their cash until we can start to see the light at the end of the tunnel. It is also important to note that Bitcoin's movement is also being caused by speculation regarding the halving event, which occurred on May 11th. Here, the mining and issuance of new Bitcoins was cut in half, tightening the supply of Bitcoins on the market. Assuming that demand for Bitcoin remains the same, the reduced supply would result in an increase in price. However, the majority of this price change was first experienced towards the end of 2019 when investors began hodling Bitcoin in preparation for the halving event. Hodling originally is a misspelling of holding that has since become the standard term, which refers to the buy and hold strategy many investors employ. It could simply be that many investors have been holding onto their cash and waiting for the right moment to jump into the market. While this pandemic has caused widespread fear and uncertainty in the markets, and the uncertainty about the future, investors have been looking for opportunities to safely invest their hard-earned cash. Some stocks are seemingly pandemic-proof, such as Amazon, but others are too volatile to speculate and invest in. We initially saw an increase in investments for digital currency, pumping the price for Bitcoin above $10,000 and other coins like Ethereum up above $280 in February. Since then, many investors liquidated their holdings and moved into stablecoins due to their less volatile nature of being pegged to a fiat currency while still providing the benefits of being a digital currency. However, I suspect that the majority of investors are waiting for things to clear up before investing their cash. And at this point, we can speculate and invest in what we view are safe havens until we can see the light at the end of the tunnel. I hope this podcast was educational to you and cleared up a lot of the misunderstandings around digital currency in the face of this new pandemic that we are all facing for the first time. I would also like to take this time to give a huge thank you to all of the healthcare workers around the world that is sacrificing their time and risking their lives to make sure everyone else can remain healthy. The best thing we can do at this time is to stay home, stay safe, and socially distance in the event that we need to go outside. And if you like this podcast, please don't forget to subscribe, follow, like, and share. And again, I hope you guys are all staying safe, and I'll catch you guys in the next episode. Until then, take care, everyone. Bye.